Hello everyone and welcome to the Compak Asset Management Market Wrap YouTube update for September 25th, 2020. I'm Moe Ansari, President of Compak Asset Management and also the Chief Investment Officer and host of Market Wrap. You've been listening to me for the last 30 years that I've been doing the daily broadcast. Every day, 1 hour, you can get the daily updates. Simply, you can click on the link below if you'd like to have that downloaded to your iPhone, iPad, or whatever device you have, where you can get the daily update every single day, where the daily broadcast, and find out what I'm thinking on a daily basis. Also, you can subscribe to this one. So whenever I do a YouTube update, you can get a notification on it. All you have to do is click on the button below and subscribe to this broadcast. I'm going to today talk about the U.S. markets, global economy, and there's an interesting setup that I'm seeing on the technical charts. I don't know if it'll come to fruition or not, but the only time we've seen this happen was in February of 2020 and July of 2007. We know what happened from that high in July of 2007. We went into a bear market. We know what happened in February of this year. What happened? Well, we could get that similar setup again. I will take a look when I take a look at the charts and let you know where we need to close at the end of this month for that to be triggered. So we're going to do a little bit more technical analysis. If you like more updates on the pandemic, I did do an update earlier on this week. Just click on that and you can see my update for the pandemic. Let's start with the U.S. markets. Markets, one thing that we have seen is growth has led value for the last 10 years. There have been these periods that we've seen, just like we saw in 1999, 2000, when we saw the tech bubble. We saw it outperform value dramatically. But then tech came down just as quickly and we saw value catch up. Same thing happened. Then value led from 2000 to about 2006. And then again, we saw tech come back. But since 2009 and 10, we've seen the tech market sort of right around here, rather, 14, 15 is where we saw tech separate itself from value, and we've seen tech stocks or growth stocks outperform value stocks for, the last 6 years. Has the time come for value? Not quite yet, but I would keep a very close eye on it. One of I call the reopening stocks. Those are one you have to look at and see if the opportunity is there because they've come down in value dramatically. The airline stocks, I don't think we ever get back to where we were pre-COVID, just like we did not go back after 9/11. We have TSA come into existence. We had to take our shoes off. We had to take our computers out of our briefcases and so on, but we went back to traveling. Same thing will happen. We are going to do it slightly differently, but we are going to go what I call we'll get back to the 90% economy. And this is what we're seeing. Again, getting back to the growth stocks, this is what we saw separate themselves. The growth stocks or technology stocks have gone up a lot more than value stocks have. And there's a big discrepancy there, and there could be an opportunity in the value stocks. But you have to be patient. If you do buy value, you buy cruise lines, you buy the airlines, you buy some of the other reopening stocks, we might see some more volatility. You might see them go down. They will not give you immediate gratification. It will be some time before they start coming up. Looking at the global economy, everybody went off the cliff. Right after the pandemic, the GDP numbers started to go down. But if you look at it now, China is just about back to where it was. But we are also coming back. You can see that we went down right here, and then we came back. Western Europe went down even more. It is coming back. You're looking at Asia. Well, they're sort of still minus 5% or so. And then we're looking at Asia, Latin America. That's still negative. And the rest of the world, it'll take them time because emerging markets do not have the resources. They don't have the money. They can put trillions of dollars into their economy. The richer the economy is, the more centralized money that can be put into these economies, the quicker they come back. That's what we've seen here in the United States. That's what we saw in China. That's what we're seeing in Western Europe. But some of the other countries, the emerging markets and the developing countries, do not have the resources. And that's why it will take them longer to get back to where they were pre-COVID. As far as the stimulus plan goes, we might get a stimulus plan. We were looking at it 3-4 weeks ago. They were getting closer to some talks, But now they're talking about after Ginsburg, they both went to the corners. But today we heard something that Nancy Pelosi said they might put out a $2.4 trillion plan instead of a $3.4 trillion plan that they had previously put out. And Mr. Meadows, who's the chief of staff and the chief negotiator for the president, and Mr. Mnuchin, who is the Treasury Secretary, they had come up to about 1.5 trillion from the 1 trillion. So the number, they are getting closer. I think we might get something that might help the market. If we do get another stimulus plan of $2 trillion, a trillion here and a trillion there, it adds up to a lot of money. And so that could be very good for the stock market, as we've seen. Looking at GDP numbers, in June, everybody is forecasting some terrible numbers for the GDP for the U.S., down 6% this year. Right now, where we're looking at, it's about a little bit over 3%. Same thing, unemployment rate. Everybody is looking at it to be around 9-10% or higher by the end of this year. We are already below 10% now. Same thing in 2021. We will see. We snapped back a lot faster, but now we have sort of plateaued. We do need another fiscal plan to come up from Congress. I think that will be the next boost. That, I think, will carry us over to the vaccine. And once we get to the vaccine, I think we get back not quite to where we were before, but close to it. That's the way I'm looking at the numbers right now. Here's the road back. Looking at Britain, it's down about 10% on its GDP. Euro area is down somewhere around 6-7%, close to 8%. We're looking at world, down about 4%. United States, down about 4%. You're looking at South Korea, and you're looking at China. They're growing. Their GDP is positive for the year. So this is all forecast that we're going to see by the end of the year. But how quickly we are going to get back there, it will take time. By the end of the year, we are still going to be negative, but not as negative as everyone thought. That's really what we're looking at right now. Economic policy, uncertainty. We are going to see business planning. Businesses were planning to put in a lot more increased investment, or what we call CapEx. That's capital investment by businesses. 75% of them at the beginning of the year were thinking that they were going to expand. From 2015 onwards, they were looking at. But in 2020, we are down to negative. Just about very few companies. We still have a few, but very few companies are looking. Amazon is looking to hire, but I don't think any small businesses are. And that is the driver of unemployment in the United States is small businesses. And as I pointed out last week, you saw that in the presentation that I did on Monday, where I showed you the Yelp presentation. 163,000 businesses closed. 60% are gone permanently. They're not coming back. We are also seeing a tremendous shift to EVs. You can see that that's electric vehicles. You can see that we were here, and they were, a small number. You can see the big spike up in electronic vehicles in 2020. And that's, we're seeing pure electric vehicle makers. You can see the sales for Tesla. And just about everybody is getting into this game now. General Motors, Volkswagen, Toyota, everybody wants to produce electric vehicles, and they're buying some of the electric vehicles, even though, as we saw from the truck, the Nikola truck, we don't know if it's real or not, but they said they did push it down the hill. It was not running on its own power. So there will be a lot of these companies that'll be out there. Tesla is the leader. The rest of them are catching up. Electric vehicles are coming. They are coming, and how quickly they're going to take over, I think we'll have to wait and see. Let's talk about charts, and this is something that I do want to get into a little bit more detail. I talked about last week about 3220 as being the low, as the support area for this move to the downside. Well, we got to about 3209 this week, popped right back up from there, closed up, and then the major support is the 200-day moving average, 3104. If we get below 3104, then this market we could be in a bigger bear market headed to these areas. That's the third wave lows, and the fifth wave lows are all the way down to March lows. I don't know if we go there or not. But if you have to have a plan that if these markets start to break, where are you going to start raising some cash? Not going to all cash. That's not what we do. But where are you going to get to a more defensive posture? So you have to have those points written out, have that plan, and be ready to execute execute what you're going to sell, when you're going to sell, how you're going to sell it. Same thing looking at the weekly charts. Again, the target for the weeklies is a lot higher than where we are. We look at the first wave up, second wave down, third wave up, fourth wave down. The fifth wave target is about 37 and a half, 37.50 for the S&P. But before we get there, we've got to go through this pullback. 3,200, 3170, and then if we get below that 3,100 area, then we're looking at 2965 or so as the next support below 2,100. At 2,900, we'll be down about 700 points in the S&P from 3,600 approximately, which was the high. That is a substantial decline from where we are even at this point. But one of the things that I was looking at is where the market goes above the previous month's high and then closes below the previous month's low. This is a monthly chart where each one of these lines is 1 month of trading. So it goes above the previous month's high, closes below the previous month's lows. This month we made new all-time highs. We got above the August high, but the low is 3284 for the S&P. If we close below that, that is what's called a key reversal. When we go above the previous month's high, close below the previous month's low. We're back up today. Today we were at 3209 as a low this week, but we closed back above it today at 3284. We have to see where we close at the end of the month. Last time we saw a weekly reversal was February of 2020. Oh, you know what happened in February and March of this year? We fell straight off as far as the market is concerned. Prior to that, where did we see it? We saw it in 2007. That's where we saw a weekly reversal, where the market went above in July of 2007, went above the June high, closed below the July low or June low. That was a key monthly reversal to the downside. So they're not very common. We saw it in January of 2007, then July of 2007, and we know what happened in 2008 and 9. We saw it in February of this year. Are we going to see it at the end of September this month? We'll have to wait and see. That's something we have to watch very carefully, that do we get a monthly key reversal to the downside for the S&P? You'll hear a lot more people talking about it. No one has mentioned this yet on CNBC or anywhere. Now that I'm talking about it today, next week you'll hear a lot more about this, the weekly reversal. If people don't talk about it, that will be good. If everybody starts paying attention to the monthly key reversal, then I don't think it'll be as prevalent or as something to worry about. Nasdaq daily charts, we've gone through wave 1 to the upside, wave 2 to the downside, wave 3 to the upside, and now we are going through wave 4 to the downside. I had put down a target of 10,500. Well, we got very close to that this week as a low. If we get below that, then 10,000 is critical support, and then the 200-day moving average, which is right around 9,500 plus or minus. Those are the three critical areas of support that I'm looking at. 10.5 is held so far. If we get back up, I'm looking at much higher targets as fifth wave targets to the upside. And I'll put those out as the market starts to move. Same thing on the weekly charts on the Nasdaq. We're looking at 10.4, and then about 9,500 is the number becomes support if you get much below 10,000. So we'll have to watch it. And these are support areas that I'm looking at in the Nasdaq. Nasdaq, very similar picture. We could see a weekly reversal to the downside on the Nasdaq if at the end of this month we close below 10,062.71. That was the close at the end of last month. If we close below that at the end of this month, because we've already made a new high, we closed below last month's low, that will be a monthly key reversal to the downside, just like we saw in February of this year earlier. If you want more information on what I'm talking about, give us a call. We'll be more than happy to help. If you want us to find the right risk number, your emotional risk number, and your financial risk number, just click on the links that you see below, and you can always go ahead and have a free review of your portfolio. And if you want us to help you with charting a roadmap to get you from where you are now to where you want to go financially, I will talk to you for an hour. We'll sit down to a free consultation. I'll show you exactly where you are now, where you're headed, how do you get there, and show you the roadmap. Looking at the gold market, I'd put down 1,800, 1,850. We are there now. This week we touched 1,850 plus or minus. If you get below that, then we're looking at 1,730 to 1,700. Again, this was wave 1, 2, 3. Now we're going through wave 4 on the downside. Then we're looking at wave 5, which should take us to about 2,500 as my target. So if you are not in gold, you want to get gold, this could be an opportunity for you to take a look at the gold market this week. That is an update of the markets. Don't forget that I'm going to do the 2-hour quarterly webinar that I do where I take questions from all of you, and it's a very detailed economic, technical, and overview, global economic overview of where the markets are, and you can always ask questions live during that broadcast. It's going to be on October 15th. Register today. Click on the link below and you can go ahead and register. We'll confirm your registration and send you a link where you can participate in that webinar on the 14th of October. Have a wonderful day. Thank you for tuning in. I'm Moe Ansari. Again, the new next update, you will be notified if you've subscribed to this YouTube channel. Thank you again.